Hello everybody. Oh gosh. Welcome to the Friday live stream, the special Valentine's Day edition. I'm a bit late today, so apologies for that. Oh. It's important to spend time with your loved ones on Valentine's Day, so I spent the morning cleaning the car and then took it out for a spin to dry it off. Oh, hang on. What is going on? Something's not working. Bear with me. Right. There we go. Okay. An interesting week in markets, I thought. Oh, what's that? I've got an alert going off. Hang on a second. Oh, corn. Okay, corn. Fair enough. We'll have a look at that in a minute. An interesting week for markets. It's been my best trading week this week, thanks to the DAX. So we'll take a look at that in a bit more detail. Where is the old DAX? It's had a right stormer of a week, that one. As have some of the other European indices, actually. We had a look at the Spanish one. The Spanish index has had a great run. So we'll have a look at all of this stuff. For those of you who haven't watched this before, welcome to it. How it works is we'll take a look at some of the major events for next week in markets. Then we'll jump onto the charts and look at a whole host of different things. Stock markets, currency markets, oil, gold, Bitcoin, a few other bits and pieces. So we'll look at that corn chart. What's going on with corn? I think corn's a buy. It is breaking out, isn't it? We'll have a look at that one as well. Look at that, price of corn. So we'll have a look at all of that. What's the S&P doing? Not far off all-time highs, but not quite there. And then if there's any markets you want looking at, we'll take a look at those as well. Okay? So if there's any stuff you want looking at, if you put it in the chat, we'll take a look. But for now, let's just get started. So I do this every week. It's our live stream. We'll do a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. For me, there's only one thing next week. There's the big thing. But we've got on Wednesday, we've got UK inflation data. You know, when we had that US inflation data out this week, I mean, that caused quite the kerfuffle in markets. And the market was expecting an annual number of, 2.9%. It came in at 3%. Where was the move? Hold on a second. Where was that move on the NASDAQ? Because the NASDAQ gapped, here it is. You can't see it on this chart, but let me show you. US Tech, here we go. So you're not actually seeing it, but this was the move on US inflation this week. So the NASDAQ was trading at 21,730. A minute later, it's at 21,500. Probably less than a minute later. It basically fell like 250 points like that, based off the US inflation data, and then it's sort of bounced back again wherever that. There we go. There's the number. You can see. No, that's not the number, is it? That's the other gap. That's the move on Wednesday of this week, and here we are. The market's bounced back. So inflation still very much a big thing. So the UK inflation next Wednesday, but the big thing is the Fed minutes, the minutes from the latest US central bank meeting. How do they feel about interest rates? How do they feel about the economy? Blah, 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 all that stuff. So that'll be a big one, potentially. I think we'll see what that looks like on Wednesday. And then on Friday, we've got US PMI data, Purchasing Managers Index data. So that's out. But Wednesday is by far and away the big one of the week, I think. So that's that. What's happened there? Oh, what's happened to that horrible page? See, I knocked this together very quickly because I was late and I've messed it up. But anyway, next Thursday, I'm doing a webinar. You know, obviously, I don't do YouTube because I like doing YouTube. It's a little commercial operation for me, hopefully, although I do quite like doing the live streams. One of the things I do, I run a WhatsApp group. In the WhatsApp group, I run these webinars every month, exclusive webinars. So I'm going to tell you about what next week's webinar is, because you should attend it. You just should. But what I'm going to go through, I'll show you the numbers in a minute. My approach to trading US stocks. This takes me literally 15 minutes per day. What to look for, managing risk, running profits, where to place stops, and much more that I haven't even thought about yet. So it'll run for an hour, at least an hour, next Thursday, at 7 p.m. GMT. I've started trading US stocks again. I did have time to normalize it down. These are the running positions I've got at the moment. So I've normalized it down to 100 quid risk. Can I make that any clearer for YouTube? Let me see if I can bump up the thingy-majiggy a bit, the zoomy. So these are the open positions I've got. So if I was running 100 quid risk per trade, there's the risk in the column. These are real trades I've got. I'm just showing you on here down to 100 quid so we can perhaps all relate to it. My margin requirement would be 1,100 quid to run those positions. I started doing it again the 7th of Jan with Arista, the first trade. 1,100 quid margin. So far it's up £287 overall, which is fantastic, even if I do say so myself. So it's made, what's that? A 25% return on margin in about 5 weeks. So I'm going to go through how I pick these stocks and how I manage the trades. There's a couple of big winners in there. Visa is a big winner. Costco is a big winner. There's a couple that haven't done much yet. There's a couple of losers, of course. Arista Networks and Capital One Financial. The Apple trade from earlier this week is doing okay. That's done half the risk so far. AT&T from a couple of days ago is doing okay as well. So that shows the performance. I mean, people in the WhatsApp group know this because I talk about the trades I do in real time. So I'm running this webinar next Thursday. If you'd like to attend, you need to be in the WhatsApp group. So the WhatsApp group is 50 quid a month. If you join using the code YouTube, it will cost you 20. You can take 20% off. So it will cost you 40 quid for the month. You get access to that webinar. You get daily updates from me. There's a whole Q&A thing. Runs throughout the day. I give an update every morning at the markets I'm looking at, trades I'm thinking of. Most people in the WhatsApp group have been in there for longer than 6 months. Some people are in for a month and then clear off, but most people don't. So they find it useful. I find it useful to do. It's a good little commercial thing for me to do. And I try and add some value by doing these webinars. So that's next Thursday's webinar. So if you're not in the WhatsApp group, join it. That is worth 40 quid of anybody's money. Yes? I mean, past performance is no guarantee of the future. But it's made a 26% return on margin since the 5th of January. So there you go. And I'm not one of these doofuses on YouTube who makes up the numbers. Every trade I've done on these stocks, I have called it out in the WhatsApp group. So there you go. Yeah, so if you want to find out more about my approach to trading stocks, join the WhatsApp group and you'll be in, as long as you're in there for Thursday of next week, Thursday the 20th, you'll get to attend the webinar. And if you join after that, you get a link to the recording of the webinar anyway. So that's it. I thought I'd have a bit of a push today because, I don't mind doing YouTube, but I'd rather not do it. So if it doesn't make me any money, I'll go do something else. But I thought I'd have a bit of a push today and see how that goes. But that's next Thursday's webinar, well worth attending. Okay, that's it. We'll talk more about the WhatsApp group afterwards. But for now, let's get into it. Let's talk about the markets. So it's been an interesting week for, again, non-US stock markets, I'd say. These US markets, there's the NASDAQ, there's the S&P. They are having a go at the old all-time highs. We're not far away. We're about 16 points on the S&P away from the old all-time highs. But it has been, I have found them. I've actually stayed away from US markets for much of this year after having a couple of frustrating trades late December, early January. I thought, sod this, I'm going to look at something else. And it's absolutely been the right thing to do because we've had some big swings, but some really scrappy trading, I think, in US markets. So I'm sort of hoping that next week we get a breakout, or even today, we get a breakout in US stocks and things start to look a bit more interesting. Let's see what it looks like. But that's where we are. If we break out to all-time highs in the US today, happy days. Everything looks a bit more interesting for next week. There's the old NASDAQ. What's the high in the NASDAQ? 130. So we're 110 points away from highs in the Nasdaq. So it absolutely could happen. But let's see what happens. But just still pretty dull, really. And there's the Dow, same on the Dow. But it's been a great. I mean, I bought the DAX this week. Again, I put it in the WhatsApp group. I bought the DAX here on Monday in the morning at 21,825. Now I'm still in the trade. The market's at 533. Brilliant. 700 points on the DAX. Bosh! It's that easy trading. No, it's just been a great move. I bought it because it moved out. It moved out to all-time highs end of last week, and we had a bit of a dip on Monday. So I thought, the old mantra, go with the trend. The market's dipped back from all-time highs. I've got to assume it's going up again. So I bought back in. What has the DAX done this year? It has been nuts. So it's at 22,535 now. It ended 19,850-ish, right? So 22,535 minus 19,850. So it's done 2,685 points this year. It's up 13.5%. And we're, what are we, 6-7 weeks into the year? If it carries on like this, the DAX is going to double this year. I don't think the DAX is going to double, but it's doing like 2% a week at the moment, DAX. Crazy markets. So the DAX really strong. I'd absolutely be a buyer of a dip going into next week. We had a quick look in the WhatsApp group at the old Spanish this week, the Spanish market. Again, you can see a great trend there. The Spain 35, the IBEX, I think it is. The French is a bit laggy, or the French is getting a move on, actually. So that's been really strong. These European markets are doing really well. The Italians, all-time highs in the Italians this week. So yeah, there you go. Strong European markets, choppy American markets. So yeah, let's see what next week brings. But very bullish. So I'd be a buyer of a dip in these European markets. I did buy the FTSE this week. I'm about 20 points the wrong way on that at the moment. So I bought those at 87.55 yesterday. But even the FTSE hit all-time highs. The FTSE, the dullest stock market index in the world, hit all-time highs on Wednesday. So I bought the FTSE, and I thought I'd see how that goes. So yeah, so that's that. Interesting, I think, European stocks. If US stocks, do they decide to join the party and we get a breakout? Let's see what happens with that one. Sorry, I'm trying to just do a couple of things at once. There we go. 294. So that's it. Stock market's still strong. What I think has been a strange market. So actually, let's look at some of these others. Hong Kong. Oh, I missed that. I should have bought that. I've been waiting to buy that. Take my eye off the ball, and the market has gone absolutely nuts over the last month. The Hong Kong Hang Seng. Great trend since 2024. Turning around, I think, that big downtrend. So that's been interesting. The China 50, I don't think has quite followed it yet. There's the China 50. The Japanese, the Nikkei, still all a bit scrappy, the Nikkei. So nothing too exciting there. The Aussie index, I wanted to buy that. Has that broken out yet? It did break out today. It broke out and it's come right back down. I think that's an interesting market as well. The Australian index, the Aussie 200. So that's interesting for me to watch next week. So that's stock market. So, European indices continuing in the short term at least to outperform the Germans, not the Germans, the Americans. Yeah, that's that. Blah, blah. I think that's interesting. What has been, I haven't traded it this week, but the dollar index, the dollar has had a pretty volatile week. We had the inflation number. To start the week, it gapped higher. Is it this week or is it last week? That's last week. So last week we had the gap higher on tariffs. Then it filled the gap during the day. This is the dollar index. Then we had a gap higher to start this week, small gap. This is the inflation. Rallies on inflation. Then thinks, oh, actually, maybe it's not that good after all. Market has really sold off. And then since then, basically, we're at new lows for the year for the dollar index. So I was wondering if these old lows from late Jan were going to hold, and they haven't. And the market, as we speak, is trading in its worst levels since the 12th of December. So we're at a 2-month low for the dollar index. I thought it was going to bounce, hasn't bounced. Here we are. So I don't know. So that is a market. I look at it now and think, do you know what? I'm not going to do anything with that market now. Let's see what happens. I think next week will be interesting. because this was the major low, 105.40, before the market went to, was it a 2-year high? Yeah, a 2-year high. So let's see. So I would still be buying the dip longer term, but it's got to stop dipping. So I think it's an interesting market next week, particularly with those Fed minutes coming out next week. Yeah, so I'll be watching it. 100 points below here, I think, is support. Let's see what happens. Let's see if we see the buyers come back in for the dollar index. And of course, with the dollar being so weak, we're seeing other markets lifted, as you'd expect. Pound against the dollar, well, that's breaking a big level, that 126. There we go. Pound has had a bit of a rally. So the pound is at its best level since December. Interesting to see if that carries on. Obviously very dollar dependent. So blah, blah, lots going on because the dollar is so weak. Yeah, but that dollar is an interesting one to watch. So that's that for next week as well. If we look at gold, I mean, gold's had, again, another amazing run. Fresh all-time highs on Tuesday of this week, up at 29.40, 29.43, something like that. Amazing. I'd still be buying the dip on gold. As usual, the question is, where's your stop going to go? If we've got a bit of a bigger dip next week, I'd want my stop at least the other side of 28.60. I mean, it has had, a big old run, gold. That's what it looks like on the daily chart. But, broke out at the end of Jan through those old highs and went up $120, $140, so 6%, something like that. So let's see what next week brings, but I'd be a buyer of the dip on gold as well next week. I think it's an interesting market. Silver, what's silver doing? Is that doing anything exciting? Not really. I mean, the trend is absolutely up on silver. We have the old all-time highs from October. I must admit, I never look at silver. It's just a bit of an odd market, I find, but the trend is absolutely up. So I'd be a buyer of a dip on silver. So there's that. Oil's interesting. This oil market is, I find it quite confusing. I mean, is it going to go up? Is it going to go down? We've had this great trend. We had the great trend up from December, mid-December, which I was in part of that move, and that ran into the 15th of Jan. Then it's absolutely turned, and all the way down I was waiting for a rally, and the rallies were just getting sold into. Then we had the big rally, relatively speaking, into Tuesday of this week. So from last Thursday lows, a week yesterday lows into Tuesday, and the market's just fell off a cliff again. I think it's an interesting trade here. If you thought, it did very briefly yesterday morning, push to new lows for the year. If you thought the oil was massively oversold down here, and I sort of do think that, an aggressive trade is to be a buyer with a stop the other side of yesterday's low, whatever yesterday's low is. 70, maybe the other side of 70. 70.58 was the low from yesterday. But I'd also have to say, from a textbook point of view, that big trend is still down. So that's an interesting market to watch next week, I think, the price of oil. But absolutely, the trend has been down since mid-January, has been pretty sideways since September. Blah, Natural gas had a bit of a run this week. I mean, I'd be a buyer of natural gas just based on the fact the trend is up. It broke out. It's hit multi-year highs. It's hit its best levels since December 22. It did that in this year. So I'd have to be a buyer of the dip. It's been a bit scrappy, but it did sort of get a bit of a move on so far this month. It's gone from 350 to 395 at the moment. So that is positive. But as we know with natural gas, it is the crazy market, isn't it? That it can just turn on a dime, as the Americans would say. But for me, I'd be a buyer. If it sold off next week, it'd be interesting to be a buyer with stops below 340 or thereabouts. Let's see what happens with that one. What else is interesting? Copper. I bought copper yesterday. That had a bit of a run. I bought them at 465 and they had a bit of a run up and they've come back off again. I think copper's interesting because it broke out. Let's just get rid of that for now. It broke out. Copper has been pretty boring for a while, but it did break out through the summer highs around about 470. So my trade on copper, my bet, is that this is a valid breakout and the market's going to run higher. Let's see how that works out. But I thought that was interesting to see what was going on with that. Bitcoin, pretty boring. Bitcoin, look at that. So we had obviously that run after the US election, big run up in Bitcoin. Very brief sort of spike to all-time highs back in January, and just a bit boring. Trading at 97.5 at the moment. Nothing much exciting to say about that one. Orange juice, what a market this has been. Oh my God, it's down 6% today. It's an absolute rout in orange juice. Look at that, all the way down. I've been thinking, well, this thing's going to bounce. I haven't actually bought it. I've been waiting for the bounce. That has been brutal. So orange juice, if I looked at that then, end of 2024, absolutely, I am a buyer of the dip in orange juice because the trend is up, of course, isn't it? And I don't want to be one of these idiots who trades against the trend and joins the 75% of people who lose money. So the trend was absolutely up in orange juice. I want to buy the dip, but oh my gosh, what a move we have had. Look at that. So it was 480 at the end of Jan. It's 333. It's dropped 30% this month, orange juice. I Googled it the other day. Why is orange juice falling? And I don't think there was any news. Because it's all about crop issues. I think it's old news. Oh, a significant drop in orange production due to widespread disease like citrus greening. But surely if you've got a drop in production... Oh, hang on. Extreme weather events leading to a reduced supply and subsequently lower demand in the market. Essentially, there are fewer oranges to juice, so prices are going down due to the oversupply of juice relative to the limited fruit available. It doesn't make sense to me, but whatever. The chart tells the story, doesn't it? The chart tells the story what's going on. And here we are in orange juice, absolutely nosedived. What a move that's been. And I was wondering yesterday whether these old lows would hold, and they absolutely haven't so far anyway. What's the 2024 low? Is that going to get taken out? What was that low? 292. Amazing move. Amazing. So, yeah, there we go. That's the move in orange juice. Corn. I mean, I had that alert come. I want to buy corn. I think that's interesting, corn. I think, again, a lot. Some of, not all, but some of these agricultural commodities have been showing strength lately. And I do wonder, I don't know if I said it last time round, is this going to feed into a problem for inflation again further down the year? You know, look at corn. It was 363 or whatever in August. It's 490 a whatever today. You know, that's a 30-40% move in the price of corn since the summer. I think it's interesting because the big trend in corn had been down, and we're breaking out. We've broken out through the May highs, last year's highs. Those are, I think. We're breaking out the trend line. Is this the start of a new trend in corn? So I think that's interesting. So let's see what happens. So yeah, lots to watch next week. That's it. How's my little stock trades doing? Now the market's open. Oh, it's made even more money since we last looked at it. You see, you need to be on this webinar. So now I'm up 304 on 100 quid risk per trade, 1100 margin, up 304. I think that was at 287 when we looked at it? It's made £17 in like 20 minutes. That's almost half your WhatsApp discounted first month it's made. Obviously, past performance is no guarantee to the future. Yeah, there we go. Interesting stuff in corn. So for me next week, still all about stock markets. Do we get these US markets finally break out? It looks like they've backed off a bit again today. Oh no, they're sort of having a go. European markets, I saw someone mention, I mean, clearly this Russia, Ukraine, US peace summit thing, if it happens, you know, that would give hope to European markets. You'd think I think that's definitely helping the run in European markets. I mean, they had been running before any of that talk came out, but they're interesting. Aussie markets, see if it breaks higher, and just the dollar. You know, what's going on with the dollar, with it being on new lows for the year. I think it's a really interesting week next week. So yeah, let's see. And that oil thing. So I do, even though the trend is down, I am getting more and more tempted to be a buyer of oil. But let's see. So what we'll look at now, we'll look at the stuff you want looking at. But again, the quick commercial break. Next week I'm doing the webinar. If you're in the WhatsApp group, you can attend it. It's well worth a month subscription to the WhatsApp group. I'll talk about my stock trading on shares. For those in the WhatsApp group, I'll be looking at some more stocks this afternoon as usual. Those are the trades I've got already running. I'll show you the charts of them. Where are the charts of them? Let's see what's moving today. Capital One Financial. So I'm in that. That's one of the losers at the moment. Apple. That's been a good trade, Apple. I bought the dip in Apple. The best performer. I've had those since last year, actually. They're not included in this year's figures, but I've had those since back here. But Visa has been a good performer. Costco is another good performer. And Aristonet was a good performer, but has been clobbered on this DeepSeek AI stuff. So those are some of the US stocks. The webinar next Thursday, it shows how to do this in 15 minutes a day. And I hate to sound like a horrible trading advert, but I don't think I even spend 15 minutes looking at the stocks to buy. I've got a very definite screener that I go through. I'll talk about that next week. As long as you're in the WhatsApp group, you get to attend it. If you join after the WhatsApp group, I'll give you a link to the recording. But this stuff is never going public because there's got to be some stuff I keep secret, you know? I've got to charge for some stuff. So that's next week's webinar. The WhatsApp group looks like this. You get a daily update every morning, a whole load of markets that I'm looking at, levels I'm thinking about watching, trades I'm running. So at the moment, I'm long the DAX, I'm long copper, I'm long the FTSE, I'm long UK gilts, I'm long sterling yen. So I talk about those every day. Talk about stops and stuff like that. Q&A, if anybody has any questions. There were some questions this week about the gap we saw in US indices when the inflation came out. So that Q&A. So if you join, the link should be in the description. If you join using the code YouTube, it'll cost you 40 quid for the month. You can attend the webinar. You get a month's worth of WhatsApp. If you hate it after a month, you come out. It's only a month by month commitment, but most people stay for longer than a month. There you go, blah, blah, blah. To find out who I trade with, go to the website, go to the link, bit.ly/DavidTrade. Any questions, send me an email. Always happy to have emails. dj@davidjonestrading.co.uk. Okay, that's it. Let's have a look at what you want looking at. What tool am I using? Yes. Oh, yeah, someone said TradingView. Yeah, trading. I really like TradingView. I do all my charting in TradingView now. It's a late convert to TradingView, but I do like it. Nice and easy. Oklo has been in a march. Oklo, O-K-L-O. Oklo Inc. stock. Oh, yeah, it has, isn't it? What do they do? Industrial machining. That's been a great one, isn't it? It's had a real move. It's more than doubled since Jan. And it was that, it's an interesting one, that. So it had the breakout, got a bit choppy, and off it went. I mean, again, as usual, the problem I have with fast-moving stocks like this is where does my stop go? If I was a buyer today, I'd probably want my stop at least at 36, which is a big stop, but it's a volatile stock. So, yeah, that's been really good. But I do struggle to get on these fast movers. I try and get into them before they start moving. Can we have a look at Datadog? I'm still in that Datadog trade from the other week. We did it, didn't we? We did it in the live stream. Here we go. I'm underwater on that at the moment, Datadog. Oh, I'm quite underwater. I'm going to get stopped out on that. So I bought that. I bought that on the live stream. Where is my stop on that? Hang on a second. Let's bring it up. They're not doing very well, these live stream trades. They were doing all right the other week. So I bought... My stop on Datadog is just at 130. I mean, it has sort of crapped out, to use the technical phrase, isn't it? What was that on? Was that on earnings? So the trend is still up. Yeah, it's earnings, isn't it? So the market didn't like its earnings. The trend is still up, but it has been clobbered. So I would be, if I get stopped out, I think it's interesting to be a buyer lower down. Yeah, so for me, I'd be a buyer, but it needs to calm down a bit. And it's a bit weak at the moment, Datadog. And Chubb, this is one I had last year, I think, Chubb, from memory. Let's have a look. Yeah, there we go, because there's my trend line. That trend has changed a bit, hasn't it, since last year? So I was in these last year. But I think we are seeing a reversal. So for me, I'd rather be going short Chubb, I think, if anything. So I'll be going short. I mean, the good short it's the Harry Hindsight trade, but up here, I think, end of January at 275, and it rallies back up to these old 280 highs and bang, falls off. So I think I'd be going short Chubb, to be honest. If people fire in, if there's the same person firing lots of requests for stocks, I'm not going to look at them all, just so you know. Because there's a few people, and it's fair enough, who will put in like 10 stocks every week. And I'll look at 2, but no. Join the WhatsApp group, and I'll answer questions all day long for you then. I've just seen a few with the same names coming through. I'm just getting a bit stricter now, So there we go. Can we have a look at the US 2000? What's the US 2000? Is that the Russell? Is it the small cap? Where are we? I do have it here somewhere. I thought that was in an uptrend, actually. Let's have a look at it. Yeah, that's in an uptrend, isn't it? I would be a buyer, but again, it needs to break out, doesn't it? November 21 highs. It had a look at those in November 24, and it's fallen back. But that trend is up. So on the Russell, from a more medium-term point of view, I would be a buyer of that, and I'd put a stop below 21.50. But it all needs to... They need to find some momentum, don't they, these US markets? I think they need to find a bit of momentum. But that trend is up on the Russell. Interesting to see if we do see the Nasdaq and the S&P break out. Do we see the Russell follow through as well? Is it time to short Intel and Supermicro? Again, let's have a look at Intel. I would have to be short Intel. I remember we looked at that last time around, didn't we? And that's why I've got all these lines drawn on it. It gapped lower on the earnings. It's had a rally. I would want to be short. If I had to do it today, I'd be short Intel. The problem is, again, I probably need a wide stop. The closest I'd want my stop is above $26.50. But yeah, I would want to be short because the trend is still down. Okay, it has been a bit sideways since the summer, but it hasn't made much progress. You think what the Nasdaq's done since the summer, and what's Intel doing? Not very much, is it? So I would be a short person on that. SMCI. Supermicro is just too volatile for me, isn't it? I mean, look at the thing. It was absolutely nuts last year. Then there's a whole question about, I don't know if it was the case, but accounting irregularity, allegations. The stock went from $120 in March, $20 in November. Even in the last couple of weeks, it's moved, what's that? More than 50%. Again, I'd probably be tempted to be short though. First sign of weakness, I'd be short with a stop somewhere above 50. It's interesting that, isn't it? Maybe 50 is a bit of a psychological barrier for Supermicro, SMCI. So yeah, let's see. Let's see what happens. But I'd be tempted. Yeah, I wouldn't be a buyer. I wouldn't be chasing it just yet. We looked at the US 2000. Wolf Speed from Tom. Wolf Speed. That's a great name. That deserves to do well. Oh, but it's not. It's doing exactly the opposite of what a speeding wolf would be doing. That's not a wolf. That's a dog. That stock. Got to say it. Look at that trend. So what do they do? Wolf Speed. Whatever they do, they're not very good at it. They do semiconductors. Interesting. So they went from 140 in November 21 to $6 today, and it's like death by 1,000 cuts, isn't it? So for me, I wouldn't be a buyer. Okay, maybe it's oversold down here and blah blah blah, but no, it's absolute no, not one for me. That one. I mean, maybe at some point it'll turn around, assuming it doesn't go bust. Not that I'm saying it's going to go bust, of course, but maybe at some point it'll turn around. But I think there'll be plenty of time for it to turn around. I'm looking at their website now. I'm just intrigued now. I wonder why has it gone so wrong for them? Silicon carbide supply rises to meet innovation demand. Okay. Well, there you go. That's Wall Street. Interesting, isn't it? How their fortunes have turned. Anyway, that's that. So no, not one for me. If I absolutely had to buy them, I would put a stop below $4.50 and stick my head in the sand and hope it turns around. But yeah, quite weak that one. Maybe it'll turn around at some point, but oh yeah, horrible chart, horrible trend I should say. But thanks for that. Always interesting to look at some of those. Like I said, I'm going to ignore some of the people whacking in the same ones. I'll have a look at this one though. Alibaba, the Chinese, often referred to the Chinese Amazon, isn't it, or whatever. This had been turning. Oh, it has turned it around. It's interesting, Alibaba. We've looked at this a lot over the years. Downtrend into November 22. Breaks out. Oh, this all looks quite positive. I would have thought at the time. Then goes sideways, blah, 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 blah. Very boring for a long time. And then it's broken out. I think that's an interesting one for next week, that is, for me. So it's broken out. It's hit its best levels today since Feb 22. So it's the 3-year high in Alibaba. So I would think about being a buyout. I wouldn't buy it yet. I think it's an interesting one to watch next week because finally it's making some progress through this $120 level. Is that on earnings? It's got earnings next week then, is it? Earnings next Thursday. Let's see. Let's see what happens with that one. But that's an interesting one for next week. When looking for stocks using a screener, does it make sense to scan for price above the 200-day simple moving average, 50 simple moving average crossing above the 200-day simple moving average, the idea being looking for stocks that are trending upwards? Yes. The idea being to look at stocks that are trending up or reversing. I never look at moving averages, right? So I don't. But you know, in this game, there are 1,000 ways to scan a market. I look at price. All I care about is price. But yeah, that's a fair enough. If you're looking for, you know, price above the 200-day moving average, by definition, is in an uptrend, longer term uptrend. 50. What did you say? 50 crossing above the 200-day is a classic longer term trend signal buy. How good it is another kettle of fish, but let's not get into that. But yeah, I think that's as good a place as any to start from. You'll find there'll be some rubbish in there, but I also think using that methodology, you'll find some interesting stocks in there. You know, I've got a different way of doing things, which I'll go through on the webinar next week. But to give you an example, you know, this for example, is a list of some of the stocks that I'm looking at. I go through it normally every day and have a look. So, I mean, Cisco's had a bit of a funny week. I haven't bought those yet, Cisco. But that Cisco's interesting because it's like threatening all-time highs, for example. CrowdStrike is another one. I mean, what a turnaround that's been. CrowdStrike was the company that crashed the internet last year, if you remember. And here we are, all-time highs on CrowdStrike. AT&T, I did buy those the other day, actually, AT&T. They've done well, AT&T. So that's AT&T up there. So I bought those at 24.80, so they're 25.80 now. AJG, Arthur Gallagher. There's another one on my list, Trender. And Goldman Sachs, Didn't buy those. Still would buy them though. So yeah, the point is, you know, absolutely, I think it does make sense to have some sort of mechanical system using moving averages. I don't like moving averages, but I don't like a lot of stuff, do I? So, but it doesn't mean it's wrong. I think it's a fair place to start from, and you could come up with an interesting list of things to look at. So yeah. For example, TAL looks interesting. TAL, TAL Education. Yeah, it looks. I mean, for me, it looks a bit horrible longer term, I'd say. But and the problem for me on that is, where does my stop go? Right, it's too volatile. Where's my stop going to go? I want my stop below $8.60, which is a 50% stop. So for me, that's no good. So this is interesting, isn't it? You say TAL looks interesting. I say it doesn't look interesting. This is what makes a market, isn't it? This is what makes buyers and sellers. So I'd actually think about maybe going short TAL. Maybe you think it's an interesting short. I don't know. Maybe next week it'll be $30. For me, that's too volatile, though. It's too volatile. What I want is, if you look at, and it's not. I'm not saying it's the right way of doing it, but it is absolutely the right way for me to do it. I want sort of nice steady trends. There's Apple. I mean, that one went a bit nuts. AT&T, that's gone a bit nuts actually. TJX companies, nice steady trend. I know where to put a stop. Broadbridge Financial, nice steady trend. Visa was a nice steady trend, and then it did actually take off after I got into it. So for me, that the likes of that TAL is a bit too nuts for me. But I think if you apply a screener using that methodology, classic, moving averages, love them or hate them, they're a classic trend following methodology. It will throw up some interesting stocks. So a good place to start from. There we go. Frog. What the hell is Frog? Let's have a look at that. Frog. J Frog Limited. Oof. Again, that's a bit too nuts for me. That is a pretty volatile stock, For me. It was it's moved like 50% this year. So yeah, it's not one that appeals to me. What do they do? I'm quite intrigued now. J Frog. It's got to be fashion. Should we say fashion or pharmaceuticals? Something, something frivolous, surely. Oh my God, they're not. They are a DevOps repository manager. Who knew? Explore the JFrog platform. One source of truth. They're a software company with a crazy name. There you go. Right, let's get back into it. Alibaba, we looked at that. Race. Do you know what? Funnily enough, me and one of my neighbours was looking at these yesterday because we were talking about there's a Ferrari Enzo going into auction. This is fascinating, I'm sure, for 90% of you. There's a Ferrari Enzo going into auction with Sotheby's. 2003 Ferrari Enzo, right? For those of you of a certain vintage, you know, Ferrari's hypercar from just after the turn of the century, going into auction with Sotheby's, and it has covered, there it is, beautiful cars. It's covered 1,042 miles in 22 years. And me and my neighbour were saying, what a waste that is in 22 years, only doing 47 miles a year in that car, blah, blah, blah. So then I said, well, let's have a look at the Ferrari share price. Ferrari share price, here it is, race, has doubled in the last 2 years. So 2023, it was about 225 a share. Here we are at 506 a share, more than doubled then. And it's making fresh all-time highs. Bish, bash, bosh. There you go. So that's an interesting stock for me next week because it's breaking out. Again, I'd probably want to see a bit more to and fro going on so I can have a sensible place to set a stop loss. But look at that one go. Yeah, and they say, you know, there's a cost of living crisis and Ferrari's share price is going through the roof. I think the sort of people who buy Ferraris aren't too bothered about the cost of living prices and the cost of eggs, are they? Cracking trend though. It's almost a textbook trend in the Ferrari share price. So that's the New York listed Ferrari. Absolutely phenomenal. When did it come to the market? 2016. 55. God, look at that. It's up nearly tenfold in 8 years. Whatever it is. 9 years. Whatever. There you go. Interesting one for next week for Ferrari. Great trend. There we go. Cough. You mentioned cough. What's cough? Cough. Wisdom Tree Coffee. Is that an ETF? Hang on a second. Is that the right one, or are you talking about something else? Don't know what you're talking about there. You're talking about the coffee ETF, which will be up because the coffee price has gone nuts. If you want to clarify that for me, if it's a completely different company altogether, but coffee has gone nuts in the last whatever it is. I'll show you on here. Hang on a second. But if it's a stock, let me know what it is. Where is it? Coffee. There's the price of coffee. Look at that. Crazy. So it's gone up 30% in a month, the price of coffee. SMR play for nuclear power fueled by AI. SMR, New Scale Power Corporation. Yeah, it's a bit funny one, isn't it? I mean, the trend, I'd have to say the trend is up, isn't it? So we've been talking about trends. Trend is up. It's had a heck of a move over the last year from $2 to 24. As usual, my problem is, where does my stop go? You know, and my stop would need to be below $16. So it's a big stop again. It's an $8 stop on a $24 stock. You know, so it's like a 30% stop, isn't it? So it's quite that's why I do have a problem with this volatile stuff, because I don't mind having like 15% stops on stocks, but having a 30% stop on a stock is quite a wide one for me. But yeah, interesting to see how that all pans out. What are your thoughts on backtesting? Would you backtest a strategy? No. Or would you rather test an idea on the live market? Yes. But there's nothing wrong with backtesting at all. If I had the data and knew what I was doing, it'd be quite interesting to run a backtest on stuff. But I do over the years, if I have an idea, I say, well, let's try this with real money, but only small level of risk. So, but backtesting, fine. You can end up over-optimizing your backtests to come up with the perfect system. And I think that's a lot of what some people do when it comes to backtests. Yeah, but for me, I test it with with real money and in real markets. And ultimately, you know, all my stuff is trend following. And, you know, I think a lot of technical analysis is rubbish. And I say that as somebody who qualified as a technical analyst in 1995 and teaches the technical analysis course for the Society of Technical Analysts. You know, but I will hold my hands up and say probably 70% of it is absolutely a waste of time, right? But markets do trend. You know, most of my stuff is geared around trend following. So if there's anything new I'm trying, It's normally just different ways of placing stops. So I'm more than happy to place it in the real market. But yeah, absolutely, backtest stuff if you want to. Just be careful that you don't over backtest it and over optimize it to find out the perfect system, because then you have the perfect system for trading historical data. Unfortunately, we don't trade historical data in the markets, and going forward, the market will be slightly different to how it was in the past. So there you go. But yeah, interesting. Nebius, NBIS, Nebius Group. Oh, what do you reckon? It's interesting, isn't it? It's volatile again, isn't it, though? It's pretty volatile. I mean, it's moved. Again, it's moved like $20 in 3 weeks. You could, this is, I mean, it's in most markets, you could make an argument to be a buyer or a seller. So you could make the argument, has it really broken out of the trend? Is it going to run out of steam before 55? So you could make the argument to be short, or you could say, well, actually, no, it has broken out of the trend and I want to be a buyer. Either way, it's too volatile for me as a trading stock, but I'd absolutely buy the dip. If it dropped down to 30, I'd be a buyer of that dip. I mean, pretty volatile again. We've got some real volatile stocks coming in today. But yeah, so interesting one that. I'd buy the dip, but it's a bit crazy. Would you buy Amex now? I'll wait for more strength. Amex is obviously the US financial company, American Express card, blah blah blah. Why is that not coming up? Stocks. Is it American Express? There we go. AXP, isn't it? Is that the one you mean? AXP, isn't it? That's the one you mean, Nick, I think, isn't it? I'd buy that. Textbook. I'd buy that. You might have made my job easier for finding a stock for the WhatsApp group this afternoon. Hang on, let me add that. Add that to my little list of hot stocks. I think that's really interesting, though, in all seriousness. There we go, let's put that one in. The trend is up on American Express, AXP, from October 23. It hit all-time highs in Jan. It's dipped back, it's held. I'm going to buy it. So for me, I'd be a buyer, and the closest I'd want my stop is the other side of 280. Oh, D-Dog's been stopped out. Other side of 280. So what's that? So on if I'm a buyer at 310 minus 280, it's about 30%, isn't it? Divided by 310, 10%. Sorry, yeah, it's a 9.6% stop loss. So that's more sensible for me. But yeah, that's interesting. I'd buy that. Let's buy it now. We've been stopped out of that D-Dog useless stock. Let's buy American Express. Hang on a second. AXP. Is it too big for me to trade for the money I've got in my account? What am I saying on a stop loss? What did I say? 280. Let's go 278. 278 stop loss. Oh, it's risking too much. Do they do a mini? Hang on a second. Bear with me a second, because I've only got £1,000 in this YouTube account. It's real money. It's just only £1,000 of real money of my money. So let's put the trade in. What did I say? Let's say 275 stop. And we'll do 0.2, we'll risk £70. Let's do it. Done. There we go. Perfect. That'll be interesting. Let's see how that one does. But yeah, absolutely, the trend is up. So I thought that was an interesting stock. ABX. What's ABX? ABX. Barrick Gold. I thought it was. It's interesting, these gold miners. They really don't perform how I think they should perform. I remember doing a video on them for the first time ever back in 2018. The price of gold is at all-time highs. Why aren't these gold miners going through the roof? I'm sure there are reasons why, but they're not. Anyway, so there you go. That's Barrick Gold. And what's the other one called? Oh, that's Barrick Gold as well. There's two Barrick Golds. Oh, that's the Toronto Barrick Gold. There's the Barrick Gold on the New York Stock Exchange. It just does nothing. It's sideways. I assume that's the one you meant, but there we go. Platinum. Hello, Kev. Platinum. Do you know? I don't really feeling it for platinum. It's just boring. It's just sideways, isn't it? So for me, I mean, look at it. It's just a sideways chart. I would do absolutely nothing. I'd go and buy copper. That's what I would do. Yeah, it's even on the hourlies. What does it look like on the hourlies? Oh, okay. Looks a bit better on the hourlies, doesn't it? But again, so I'd be Okay, so I'd be a buyer on the hourlies, even though the dailies is pretty boring. I'd be a buyer on the hourlies, and I'd put a stop loss at least below 975, if not 960. So yeah, so on the hourlies we can see a trend, but the dailies, it just doesn't do anything. And it has done in the past. Oh, actually, no, it hasn't. Not in the recent past, anyway. So yeah, for me, not a lot of excitement in platinum, but on that hourly trend, absolutely, I can see it there. So I wonder if I got stopped out of this bund yet. This is not the bund. DAX has come off a bit. It's come off a little bit, hasn't it? US markets still no real momentum. Anyway, what have we got? Where's the guy with nat gas and oils news? I don't know. What do you think about Amazon? That's another one on my buy list, Amazon, I think. So I'd be a buyer of Amazon because, again, which way is the trend? It is up, and it's been up since, well, we can go right back to the beginning of time, can't we? But the latest leg of the trend has been up for the last 2 years. It hit all-time highs on the 4th of Feb, so which is only 10 days ago. So I'd be a buyer, wouldn't I? I would be a buyer. So the only question is, where does my stop go? Maybe it's going to dip a bit further, but the closest I'd want my stop, the other side of 216, maybe down at 195, but I would be a buyer of Amazon. So yeah, let's see. How's all my little stocks doing? They're bubbling around. Okay. Coffee ETF, yeah, coffee ETF, and I would look at the real market. I mean, and the trend in coffee has been amazing. You know, it had a bit of a sell-off this week. Coffee, look at that bullish engulfing candle there. Doesn't care. It's bounced back again. The problem again I've got is where does your stop go? Where does my stop go in coffee? So that is a parabolic move, but it doesn't mean we can't have another parabolic move. You look at cocoa back in 2024. You know, that little move was like the move in coffee. You know, and it just went pow, pow. You know, so yeah, that coffee market is nuts. Lob laws. What's lob laws? Lob laws. Lob law companies. German. Is it the German one? That looks like a bit of a. Is it one of the other listings? Lob laws in Toronto. Is it Toronto? I mean, it looks good, doesn't it? I mean, it's been a great trend, isn't it? What do they do? Food retail. I mean, I'd still be a buyer of Loblaws. You know, it hit all-time highs in December. You could make the argument that perhaps the trend has calmed down a little bit since then, but I'd be a buyer. I'd put a stop below 170. I'm guessing that's Canadian dollars, isn't it? So I'd be a buyer of that one, of Loblaws. So yeah. Otherwise, we're done, aren't we? We're going to wrap things up there. So I think it's a really interesting week next week because we've got these US stock markets that are still resolutely refusing to break out. We've got the old European markets, which are partying like it's 1999. We've got the dollar index at new lows for the year. Oil, is it going to turn around? And we've got Fed minutes next week. Oh, oil got clobbered in the last, whatever it is, last hour. Fed minutes next week. So there's a whole load of stuff going on next week. So I think it'd be an interesting week. I am probably not going to do any trades today because I've had quite a busy week in terms of trading. But I'll do an update in the WhatsApp group. Don't forget, if you'd like to come to that webinar next week, wherever it is, lost it already. There we go. On my stock trading approach, which makes money. I did it last year, it made money. I'm doing it again this year. You can see it's made money so far. Past performance is no guarantee of the future. You know, if you're serious about trading, rather than just turning up for a live stream and asking me questions about 10 stocks every week, put some money, put your money where your mouth is. And we'll do this webinar next Thursday. For those of you in the WhatsApp group, we'll do the webinar anyway. Yeah, so that's it. An interesting week this week. Funny still with these US stocks. Not doing very much, but European markets absolutely making up for it. The link to join the WhatsApp group is in the description. To see my broker, that's in the description as well. Have a look at those. Any questions, despite my often brusque exterior, I'm quite happy to answer any questions that come through. about trading. I don't have all the answers, but I've been doing this a long time. So I can always give you an opinion. My email address is dj@davidjonestrading.co.uk. We'll wrap things up there. See you next Friday. Have a lovely Valentine's evening. Yes, with whoever you're having a Valentine's evening with. And if you're on your own, that's probably just as nice as well. So we'll do it all again in a week's time. Hopefully see some of you on the webinar. I know I'll see some of you because you're in the WhatsApp group anyway. Do the webinar on Thursday. Let's see where things are in a week's time. Interesting week. Fed minutes Wednesday. That's the big one. Might get a bit crazy, but we'll do it all again next Friday and see where we are. So until then, good luck with your trading. Thanks for coming along.